Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about why house prices are not coming down. Despite elevated mortgage rates and economic uncertainties, home prices in the US remain high. Many prospective buyers are puzzled as to why prices aren't decreasing. In this video, I am going to look at the key factors sustaining high home prices. The first thing is limited housing supply. In primary, a primary reason for persistent high home prices is the limited supply of homes. Many homeowners are reluctant to sell, especially those with mortgages locked in at historical low interest rates. Selling would mean taking on a new mortgage at a higher rate, which deters potential sellers. This phenomenon, often referred to as the lock-in effect, keeps existing homes off the market, reducing inventory. Additionally, new home construction has not kept pace with demand. Factors such as labor shortages, increased material costs, and regulatory hurdles have slowed down the building of new homes. This imbalance between supply and demand continues to exert upward pressure on home prices. The second thing is sustained demand. Despite higher borrowing costs, demand for homes remains strong. Millennials, now the largest generation in the US, are entering their prime home buying years. Their desire for home ownership adds to the demand side of the equation. Moreover, remote work trends have expanded the geographic areas where people are willing to buy, increasing competition in previously less sought after markets. This sustained demand, coupled with limited supply, keeps prices elevated. The third thing is investor activity. Real estate investors continue to play a significant role in the housing market. Institutional investors and individuals seeking rental home or property appreciation are purchasing homes, often outbidding traditional buyers. These investors' activity reduces the number of homes available for owner occupants and contributes to price increases. The fourth thing is economic factors and inflation. Inflation affects the cost of building materials, labor, and land, making a new construction more expensive. These increased costs are passed on to the buyers in the form of higher home prices. Additionally, general inflation leads to higher prices across various sectors, including housing. While the Federal Reserve has raised interest rates to combat inflation, the impact on housing prices has been muted due to the aforementioned supply and demand dynamics. The next thing is geographical variations. It's important to note that housing markets vary significantly by region. Some areas may experience price declines due to local economic conditions, population shifts, or overbuilding. However, in many parts of the country, especially urban centers and desirable suburban areas, prices remains high. The next thing is climate change and insurance costs. In certain regions, climate change impacts and rising insurance costs are beginning to affect housing markets. For example, areas prone to natural disasters may see decreased demand, leading to price adjustments. However, these effects are localized and have not significantly impact national housing prices trends. In conclusion, I would say that the persistence of high home prices can be attributed to a combination of limited supply, sustained demand, investor activity, economic factors, and regional variations. While some markets may experience price corrections, a significant nationwide decline in home prices appears unlikely in the new term. Thanks for watching this video and do not forget to subscribe to my channel.